I think that's right. I think the first part of the meeting, if you like, is relatively straightforward. They will cut 25 basis points. They will probably just make small changes to the projections. And they will say, we're data dependent, we will go meeting by meeting. I think that's the easy part. The harder part, I think, is going to be in the press conference to guide the market in terms of what the timing is of that next rate reduction. And here we think she will leave things relatively open and basically just say if inflation continues to come down, it's reasonable to expect that rates will come down over time, but leave open the timing, the pace, and basically say we'll look at the data.
There are a couple of factors in the mix that the ECB is still being concerned about, one of them being wages, and the latest data suggested that in some of the negotiations there is a little bit of cooling taking place, and I wonder in your view whether that's encouraging enough. The other point is around energy. Every energy executive we speak to doesn't necessarily think we're out of the woods when it comes to the energy crisis in Europe. It's still potentially an issue. So how do we think about that coming back down the track for the ECB?
Yeah, I think there's been a number of cross currents over the last days and weeks. So the way I would think about it is that the spot data on inflation, measures of underlying inflation, are still pretty high. When you look at services inflation, it's still running above 4%. So they will definitely acknowledge that. But then I would say a number of the more forward-looking things have softened. You mentioned the wage picture. I think there has now been good progress after quite a sticky first quarter. We also think on the growth front, things have been weaker. I think they will take down their near-term growth projections. And then on the energy side too, we've very recently seen significant moves. I think today they're going to sort of do a halfway house and acknowledge some of that weakening by cutting the growth numbers a bit. But I think they will hold on to the broad narrative of a recovery going on in Europe. And of course, they're not going to include all of those latest changes because they had a cutoff for these projections. So I think those are the kind of things that will then, in coming weeks and months, turn up more clearly in their communication.
What the Bank of England and the EC wanted, and for that matter, the Riksbank and the SNB, was to go as a herd with the cover of the big beast in the room. They didn't get that cover, i.e. the Fed hasn't even moved yet. The Fed will move by 25 basis points next week. I feel pretty confident in saying that, even though I have no prior knowledge of what's going on, obviously. But once the Fed starts, it's probably not going to stop. It may not be every single month, but it's probably going to, the indication from the Fed members is it looks like it's going to be a process. That will buy cover for further rate cuts from the ECB and the Bank of England and others as well. With that in mind, you're accelerating your expectations for instance, Bank of England cuts going forward.
That's right. So, I mean, we think on the Fed side, we think they will cut. We think they will go 25 basis points back to back the next 3 meetings. We think both the ECB and the BOE are going to still be a little bit cautious over the next couple of months. So we think the bank will pause next week. We think the ECB will probably pause in October. But then come the end of the year, we do think that both the ECB and the bank are going to speed up the pace of rate cuts to 25 basis points a meeting. So we're not talking, about dramatic 50 basis point steps, but I think there is going to be a bit more urgency because you are seeing that growth is weakening across Europe. You are seeing that these forward-looking inflation indications are softening, and with the Fed going, I think there is going to be more pressure on both the bank and the ECB ultimately to get rates back to normal.